The Federal Reserve's preferred inflation gauge eased in June during a brief pause in the war with Iran, but the resumption of fighting suggests the relief may be short-lived. According to Commerce Department data released Thursday, overall consumer prices fell 0.1% in June and were up 3.7% from a year earlier. That annual pace is slower than the three-year high recorded in May, when the Personal Consumption Expenditures Price Index rose 4.1% on a year-over-year basis. Core prices, which strip out volatile food and energy costs and are seen as a more reliable gauge of underlying inflation, rose just 0.1% from the previous month. Compared with the same time last year, core prices were up 3.3%, roughly in line with June's year-over-year increase. June's numbers capture a period before the conflict with Iran escalated again after a temporary truce. During that lull, oil prices fell back toward their pre-war level, helping to keep a lid on overall inflation for the month. But they climbed once more as strikes resumed in July. As recently as Wednesday, the United States struck back at Iran after it fired multiple missiles at American bases in Jordan. The longer the war drags on, the more upward pressure it will put on inflation, which has overshot the Fed's 2% target for more than 5 years. On Wednesday, the central bank voted to leave interest rates unchanged at a range of 3.5 to 3.75%, a level that has been in place since January. 3 officials dissented in favor of a quarter-point increase: Beth Hammack of the Cleveland Fed, Neil Kashkari of the Minneapolis Fed, and Lori Logan of the Dallas Federal. The decision put the new chairman, Kevin Warsh, on the defensive given his pledge to bring inflation down. At a news conference after the policy announcement, Warsh reiterated that the Fed had not wavered in its commitment to achieving the 2% target. He also said that the cooler June inflation data did not factor much into the decision to stand pat. Still, his hesitancy to fully embrace the notion that higher rates might be necessary to quell price pressures fomented fears across Wall Street that Warsh's tough talk would not be backed up by action. Long-term U.S. government borrowing costs jumped higher on Wednesday as investors pushed back the timing of eventual rate increases, and expectations about inflation in the coming years also rose. The Fed meets again in mid-September. By then, officials will have 2 more months of data in hand. If inflation does not show further signs of cooling, most officials have already suggested that they will need to tighten policy further. That's the latest on the Fed's inflation watch and the geopolitical risks that could keep price pressures elevated. Thanks for listening, and we'll be back soon with more.